Yes, sorry, I got sold on there. I'll be violating my trading plan. That is it there. So on this next one, so let me show you my chart, what I go through this week and everything. So just stick to your trading plan and know. That's it. This is JPUSD. JPUSD has been, should I say, freaky somehow. I don't know. But let's see what I got here. These are some of the trades that took this week. Let me start from here. You see, market started from here, started buying. Got this full of liquidity void, which has to be filled also, and get its lows, which some people might be buying from. Okay, let's go. Also add this liquidity void downward, which I think is the extreme and is more at the discount region, which should be like a more favorable place for you to take your buys rather than here, this place here. So let's go. Market came here. Was other block here which it tapped on. Let's go down to the 5 minutes. See, tapped on this. Any other block was aiming here. Was a good trader also, but quite risky. I know, but I just trust it because it was a risk somehow. I saw everything played out well, so it was a risk. He's aiming for here. This is one reason I bought. Before you guys seen it here, I didn't get in here because I don't just go into trade. I go into trade using confirmation in trade. So I skip down to the 1 minute or the 5 minute. I'm coming. 3 minutes first. So I move minute by minute. I don't just jump from this to this. That's how I do it. You see here, I see I had a break of structure here, and there is also a break of structure here. I know that I need to look for somewhere to get in. I started waiting patiently. So you guys can see it. I took my fib. See? Then I had something like this here. 5 minutes. See this beautiful other block still down here. After I've measured it, I see it's below 50%, and I was willing to take the risk. It's below 50%, so I can't take the risk also. Aiming for these highs here, these liquidity highs. So then I got tapped in exactly inside there. I stopped so below which broke structure. That was 14 pips. Going for a 1:2 reward, close to 2. But you can see 1:2 also. That was my first trade which I took. Also, then price kept moving again. I took a liquidity. Price started falling down. And I had to wait to see. What's going on. For this, like in structural market shift, I thought it was like, yes, I saw it first, like, yes, structural market shift first. The smart money techniques, I checked the XY also, it was creating the same thing. So I had to look for a measure of it, like, I saw this, it was creating lower highs. But let me go to DXY. See the XY here. This sample. Oh, sorry. Let me go back to GU and check the time. I know. GU. And this was our 8:20. And guys, sorry. As it was, I'm on commission. See, G was showing willingness to go down. Same with TXY, which is a smart money techniques. So I know that. Then I got to know that. Yes. So then I know that G is coming down, because based on what I'm saying, G is creating lower high, and the XY is creating lower lows, and the XY is supposed to be creating higher lows, but it's not creating lower lows. So what comes to my mind is that smart money and in the market, and I'm trying to do something. First, I saw this liquidity over there. I was like, oh, what's market trying to do? I don't know. But again, I kept going. I saw something here, a fair value gap, mini break of structure here, and I saw a fair value gap here. Immediately I find it to see what price will do when it gets there. See what price will do when it gets there. And price moved and then tapped in, then move back and take out this high here. Then let's go to GU. See if GU also respected it. Of course, I will see the smart money divergence here in GU. You fell down, creating a fair value gap here. See this fair value gap. Then tapped into this order block here and started buying, create a fair value gap here, tapped in, and continued buying. There was see a spike in, which got rejected down. Then I got in at the 50% of it, aiming for these lows, taking out these lows, going, because if you're doing Asia session, you don't want to stay in the trade for long. So yeah, I got in from there, and the trade played out where the stop loss are 11 pips or something. Well, my aim was 1:2, but didn't get that. We got 1:1.5, which was quite good. So I had to do the trade, and that played that way. Then come to the New York session, and all you guys see here. Later on, market took out this high, this Asian high, which was there. Took out the high. I see the smart money divergence. That will see it violated it. So I was anticipating, like, okay, what's price gonna do here? What's happening here? Then I saw, first of all, I anticipated this. It took out this, yes, took out the liquidity. I know it took out liquidity. Then when it came down here, broke the structure. Then I started for somewhere to go in, enough for me to sell, because it's still very much a sell market. It's a lot of lower thing. So I saw a fair value gap around there. So I outlined it. The market is going to come in here and fill the fair value gap. So that was my anticipation. Meanwhile, DXY was doing this. DXY took out ease also. Took out this Asian high also. Same thing that happened with GU. Took out the high. Then broke down. Broke structure and all. But the market was too messy. So I just had to follow GU alone and see how GSY for now. So I was looking to trade this. Sorry. you take this. I didn't send this to the Telegram because I was kind of busy. You sending this, that to Telegram, and have to do some of that trade for yourself. It's kind of you know, quite stressful. So I had this mind that price will come there and feed that. You see, if you ever look up on the 15 minutes, see that clear it is on the 15 minutes here. See, and this break of structure took out this highs and fell down. Then I saw this as a liquidity also. The market need to take this out as an inducement. And many people will will be selling from here. That's also one of the market tricks. That's why you need to go full in, learn everything. Don't leave any stone unturned. So market comes in and then tapped in. Immediately saw this long rejection. Aiming for the low, recent low. That gave me 1:2.8, which was quite nice also. So winning trades. I'm 2 winning trades. That's good. Not quite much loss because I just wait for the perfect setup. If I take this trades here, I would have taken, but according to my plan, trade the perfect trade. The good A setup, that is what you want to trade. Because you trading or setup, you see, might lead you to your losing streak easily. Get you tricked into it. So it got out here, though the market still pulled down here. So that's the one we should fall. I got that here. And then there was market created this. Immediately I looked, okay, what's happening next? I saw this. Market took out this high. And they broke market structure here. And it has an inducement here. Okay, so what is market trying to do now? What's market trying to do? And I stripped down to the 5 minutes. So I stripped down to the 5 minutes. I saw this. Can I call this situation block? I can say that, but I saw this around there. I call it situation block. There was a lot of rejection there. So I say, okay, mat space. Markets likely might reject from here. So I anticipated here this long week. Same markets. So I marked out the starting of it. Same market. Once market pass above here, I'll be looking for confirmation to sell down. I said, okay. Then I marked it out. See, this my setup is like this. I've thought it before. You can check on the previous video of a market maker buy and make a sell model. That's what I'm using here currently. See, this, you have something like this. That's exactly what's happened here also. See, if we recap to all the trades I took and the ones I took, you see, they are the same thing. I always look for a sweep of a high, then break of market structure. Same thing goes for when I'm buying and when I'm selling. When I'm buying, I look at a sweep of a low and a break of market structure. See here, exactly the same thing here. Sweep the high here, sweep the high here. Then break down, broken market structure. Break down, broken market structure. Then tapped in here. Takes fair value gap. I was anticipating it to go down for long, but I checked in, I didn't see any confirmation, so I didn't take this trade. Then I said, okay, this might be an inducement. That's why I stayed out of it. Fair value gap was expected. No, that wasn't expected. And it played out well. So if you also check here, then I got to realize that price was expecting something around here. That's why it didn't break through. So I anticipated this breaker block. I'm marking it to take out this engagement before it start falling again. So I anticipated here onto my model here, also it's still checked. So market returning here also into this breaker block. I had one thing in mind for me to look for a confirmation entry, but that I didn't see. So I didn't see it. I won't rush into my trades like quite quick or fast. So I stayed away from it. Came back again, and I saw this sweep of eye, which tapped into this fair value gap. Broke a mini market structure around here somewhere. Yeah. So I took out that engagement right here and broke structure. Then there was a fair value gap here. Mini fair value gap. I know sometimes it's hard to spot them, but according to what I said, just like I said, once you see it, you can even see it. You just have to practice more, and then you will see it. This also captain. I didn't get into here, which was nice actually, but I didn't get into here. I was just probably like clear setup for me to take trades. I don't want to get stuck or get tricked easily. So I was waiting for it, though it played out. So then I saw this which took out these highs here, these equal highs. Took it out, then break its structure. Wow. Then I said, yes, this is nice. Then I was looking from the 1 hour. That's when I stripped down to the 15 minutes when I saw break of structure. Yeah. In the 1 hour, you see here this nice order block. So the other block is the last bearish candle which was traded through. See, it was traded through. Big splash. Then I marked it out with this dotted straight line. Say, okay, here's the real. I'm expecting price to return. So I won't just be going full in aggressively. No, I'll be looking for confirmation entry. So back to 15 minutes also again. So market doing this, market riding back into our order block here. Market riding back into it. So you see, breakdown here, broke high, came down, see break of structure. Just as explained here, market make us same way. See, now you see this again, tapped in again, down to the 5 minutes. In the 5 minutes, you see, it got into the other block. Look at the other block, start of the other block here. It got in, then tapped in fully. Me looking for a confirmation entry is not for me to like reduce my risk. Normally, if I reduce my risk, it's just the same money I'll be losing. So me looking for a confirmation entry is for me to get a good risk to reward ratio. Like I'll be risking 1% to get, 4% or something. So you see, using this confirmation entry, so it broke a higher, came down, broke a low, then taps into mini order block or coming. Check on the 1 minute. See it here. Something here. See it. See it here. But I didn't put my stop here, for safety reasons. I don't put my stop above the high, which broke structure. That's it. So I did that and price respected it and started falling. And I had a nice 1 ratio 1:6. But one thing you need to know about the suit in the back of formation entry is that, you see, I go 1:6 from here, entry from here, just at the tip of the order block, inside the main order block. But if I was to enter on the other block aggressively, and my stop be above the other block, I'll be getting 1:2 or 1:1.95, which is not that good. So I risky want to get one, but when you use the confirmation entry, you see, you got a great word from it, because the stop loss get tighter and you're entering at a reasonable place. You've confirmed it that yes, this is going to turn that way, and really it turned that way. So you see here, it moved where 1:5, 1:6, sorry, and that was nice. And NFP came. Many people were anticipating that price might buy from here, but I didn't have to do that, because this was if you take your Fibonacci, you see that this is exactly this point is a 50%, and you buy from there is not like right. I won't say wrong, but isn't that right? I'll be looking to buy. I'll be looking to buy from it, you know. I'm looking to buy when price come into this ultimate trading trade zones, my OTA, and then one thing which I kept in mind was this liquidity void here. You see it? Price to come fill it. So why would I be buying above it? So I just say, okay, let me just focus on the sell buyers trading down into this liquidity void and expecting price to go up. Ultimately, or it might not go up, or it might keep selling down, because there's also liquidity down, but this price created from last week to this week. So that's also what I'll be anticipating next week. So in other words, this was just a trade recap of it all. So that's why I didn't take that year. So you can say it's a nice setup, but now if you also check, the confirmation they played out well like expected, but it is what it is, guys. We keep moving. I'm not that good at what I do. I would say I'm good. I'm still learning, but these are the result of me practicing, and it's really showing my trades. So you all are planning to quit, please don't. Stick to the trades and all. Thank you. You're welcome. And these going to USDJPY, which I shared on the Telegram group. And that trade was nice, bro. It was really nice. Nice USDJPY. So USDJPY, I don't use FX team. Just under. Okay. USDJPY traded into the daily order block. Then I saw a breakout structure here, which wasn't that clean. But I had this in mind that price is tapped in here, because it's already confirmation from the daily, which is like a top-down analysis. Then I got in here, aiming for this high here, 1:2, and it got tapped. Then I saw this liquidity up here. So the market is going to take at least. And market left the favor look up around here. Then I saw this breakout structure also. I was saying, okay, anticipate market to come back in here. Market price was around here. I was expecting market to come back in here. And truly, market dipped in like a spike. I would call it snapper entry. Most guys call it snapper entry. Like 50%.